Investing in real estate has long been considered a sound financial strategy, offering both stability and the potential for substantial returns. In this video, we will explore various real estate investment options, including rental properties, real estate investment trusts, and real estate crowdfunding, to help you diversify your investment portfolio and navigate the complexities of the real estate market. Before we begin, please like and subscribe to our channel. Rental properties. Investing in rental properties is a time-honored method for owning real estate directly and generating income. By acquiring residential or commercial properties and leasing them to tenants, investors can enjoy a consistent rental income stream, which can provide financial stability. Additionally, over time, the value of the properties may appreciate, offering the potential for substantial capital gains. Direct ownership of rental properties enables investors to have more control over property management and decision-making. But it also comes with responsibilities like property maintenance and tenant relations. However, it remains a popular choice for those seeking hands-on involvement in their real estate investments and a reliable source of passive income. Real estate investment trusts. Real estate investment trusts offer a unique and indirect approach to real estate ownership. They are investment vehicles that allow individuals to invest in a diversified portfolio of income-generating real estate assets without the hassle of direct property ownership. REITs typically focus on specific real estate sectors such as residential, commercial, or industrial properties. They generate rental income and, by law, must distribute at least 90% of their taxable income to shareholders in the form of dividends. Investing in REITs provides an attractive level of liquidity and diversification, as they are traded on major stock exchanges much like equities. This means that investors can easily buy and sell shares in REITs, making it a more accessible and flexible option for those looking to include real estate in their investment portfolio. Additionally, they offer a potential source of passive income and capital appreciation as the value of the underlying real estate assets appreciates. Real estate crowdfunding. Real estate crowdfunding is redefining how individuals invest in real estate by harnessing the power of technology and collaboration. It brings together a community of investors through online platforms to pool their resources and collectively invest in real estate projects, such as apartment complexes, commercial buildings, or development ventures. This approach provides accessibility to a wide range of real estate opportunities with relatively low capital requirements. Real estate crowdfunding platforms allow investors to participate in both debt and equity investments, offering flexibility to align with their risk tolerance and investment goals. This collaborative model democratizes real estate investing, making it more inclusive and reducing the barrier to entry for those who may not have the capital or expertise for direct property ownership. It also leverages the wisdom of the crowd, enabling investors to tap into the collective insights and experience of a diverse group of participants. Rental properties versus REITs. Comparing rental properties to real estate investment trusts, REITs, involves assessing the trade-offs between direct ownership and indirect, more liquid investment. Rental properties offer hands-on control, potential for substantial rental income, and the opportunity for property appreciation, but they require active management and a significant initial investment. On the other hand, REITs provide investors with easy diversification, liquidity, and a relatively passive approach to real estate investing. They generate rental income and often pay dividends, but they may lack the same level of control as direct ownership. The choice between the two largely depends on individual preferences, financial goals, and the degree of involvement one is comfortable with. Some investors may opt for a mix of both to leverage the strengths of each approach within their investment portfolio. Active versus passive real estate investments. When building your real estate portfolio, it's essential to determine your investment approach. Active real estate investments involve hands-on management, such as owning rental properties and overseeing property maintenance. Passive investments, like REITs or real estate crowdfunding, require less direct involvement. Consider your time commitment, risk tolerance, and investment goals when choosing between active and passive strategies, and determine the right mix for your portfolio. Remember that diversifying between both types of investments can provide a balanced approach to real estate investment. As the real estate landscape continues to evolve, real estate crowdfunding is likely to play an increasingly prominent role in reshaping the way people invest in tangible assets, making real estate accessible to a broader spectrum of investors and changing the dynamics of the market. Risk mitigation and due diligence. Mitigating risks in real estate investments requires meticulous due diligence and a comprehensive understanding of the factors that can impact the performance of a property. Successful investors conduct thorough research, examining factors like location, market trends, and the financial health of the investment. Additionally, they assess the quality of tenants, lease agreements, and the potential for rental income. Diversification is another key risk mitigation strategy, spreading investments across various property types and locations. Understanding the unique risks associated with rental properties, REITs, and real estate crowdfunding is essential for making informed decisions. Moreover, staying informed about the real estate market and keeping a watchful eye on economic and regulatory changes are integral to risk management in real estate investments. Whether you're a direct property owner, an REIT investor, or a participant in real estate crowdfunding, robust due diligence and risk mitigation strategies are vital for long-term success. Tax considerations in real estate investments. Tax considerations play a pivotal role in real estate investments and can significantly impact an investor's bottom line. Rental property owners need to be mindful of property taxes, potential deductions like mortgage interest and depreciation, and the tax implications of rental income. In contrast, real estate investment trusts, REITs, are tax-efficient investment vehicles that typically do not pay federal income tax, but investors are subject to taxes on their dividends. Real estate crowdfunding may involve complex tax implications, and investors should be aware of potential tax obligations. Additionally, property sales, both for rental property owners and those investing in REITs or crowdfunding, can have capital gains tax consequences. To optimize the tax efficiency of real estate investments, it is advisable to work with financial advisors or tax professionals who specialize in real estate to ensure compliance and make the most of available tax benefits. Building your real estate portfolio. Building a diversified real estate portfolio is a strategic endeavor that involves careful planning and ongoing management. Investors should begin by defining their financial goals and risk tolerance, which will inform their investment strategy. Depending on their preferences and expertise, they can choose to invest directly in rental properties, invest in real estate investment trusts, REITs, for more liquid exposure, or participate in real estate crowdfunding. Diversification should be a central theme, as it spreads risk and reduces exposure to market fluctuations. Property selection is paramount, and a focus on factors like location, property type, and market conditions is essential. As the portfolio grows, investors should continually monitor the performance of their investments, adjust their strategies as needed, and consider factors like property maintenance, tenant management, and market trends. Building and maintaining a resilient real estate portfolio is a dynamic and rewarding process that offers stability and potential growth in a well-structured investment plan. Real estate investment education and resources. Ongoing education and resources are indispensable in the realm of real estate investment. The field is characterized by ever-evolving market dynamics, regulatory changes, and emerging trends, all of which can significantly impact the performance of real estate assets. Engaging in continuous learning through books, courses, and online resources equips investors with the knowledge and insights necessary to make informed decisions. These educational materials cover a broad spectrum of topics, from property selection and market analysis to investment strategies and tax implications, ensuring that investors have the tools they need to thrive in the complex world of real estate. Moreover, staying up to date with real estate resources provides investors with the capacity to adapt to shifting market conditions and make agile investment decisions. Whether you're a beginner seeking guidance or an experienced investor looking to fine-tune your strategies, the access to a wealth of educational resources empowers you to refine your skills, mitigate risks, and maximize returns on your real estate investments. With ongoing education and resources, you can confidently and competently navigate the challenges and opportunities that the real estate market offers, ultimately enhancing your potential for success and financial growth in your real estate investment endeavors. That's all for today's video. What are your thoughts on this? Let us know in the comments down below. And make sure to like and subscribe to our channel.